Good morning, everybody. It's Christian from Serene Education with the 4 major notes update for the 14th of September 2012. Hi, guys. Wow. Yesterday, kicking it on and upwards. Massive move to the upside and trading straight into that 1300. Why 1300? As I maintained, if we stayed above the institution moving average on our daily, we would be heading into the next support and resistance level, and that was in the shape of this prior major support and resistance level here through February, March, April, May of this year. A lot of consolidation here prior to the breakout to the downside through that negative month in May. So that would be in a definite target level yesterday, and sure enough, we saw a nice move to the upside. Pull back during the Asian, starting with the European session, then moving higher through the US session and closing at the 1300. This morning in the Asian session, taking that and really moving to the upside. Nice bullish engulfing candle, very little wick. So a lot of momentum to the upside. It needs to stay above 1300. Can break above 1300 and find support there. This is looking really positive. Why? Because this happened to be a major resistance level in the past, and getting above it is constitutes a major positiveness for long-term growth to the upside. So where to from here? Well, ultimately to the other prior swing would be an ideal target. But otherwise, back up towards these prior swings, you can see quite clearly if I just take the highs of these previous ones, you can see how nicely the trends just recently, this little intermediate trend over here, the major one broken not so long ago. If I just draw the nice and thick, you can quite clearly see that was the first major trend being breached down here in early September. Then the second one, which took us to the institution moving average, which happened to be there. This little one over there, this consolidated this trend where you back towards that institution moving average. There we go, that being breached. And now the long-term one, if you take the prior highs, you can look at potential targets on these ones. All the way back to these ones here in, what's that, May of 2011. You can see how it coincides quite nicely now with this prior swing low here. And these would be your next targets. So target 1, if we can find price actually finding support above 1300 next week in particular, we could potentially be looking at price heading up towards that 13,2500 long term, and that would be our next target. Second target up here, if we get above that trend line break, then we should be looking at the prior high here at 1335. Third target up here at 13,500, and above that, well, clean air towards at least a slight consolidation here at 13,650. Another one here at 13,8500, and back up towards the major support and resistance breakout that we had back in the first part of February, March, April, May, June, July, August of 2011. So major support and resistance level through this part as well. So you can see that if I look at the hard right edge here, CTC is very much in favor, upside swing highs depicting upside movement. Nice trend to start with, but got very aggressive just recently. For the past week or so, you can see that momentum really genuinely moving to the upside. Very bullish candles, very little wick. There's only one particular day that we had a lot of wick on it, well, this past week, but most of it just very genuine sentiment moves, and in this case looking favorable to the upside. So as long as it maintains now above 1300, next week should be pretty present. We could see price moving or inching away back up towards this 1325 if we find nice support above the 1300. The same can be said for sterling against US dollar, rallying. I mean, look how strong. Look at this momentum through here, this massive move. I mean, we're talking more than a 70-degree angle. This is serious positiveness in the market. If it's a knee-jerk reaction, so be it. I mean, it is moving. I mean, you want to be trading what's on the chart. You know, at the end of the day, fundamentals, yes, they do play a part, but if you want to be trading just what the charts are telling you, you should be in this already and making some serious headway to the upside. Next target should be roughly around here at the 1625, between the 1625 and 1630 mark, as we head into this next price support and resistance level here. What we saw before the major sell-off in May. We're only worried about the lower swings that you've seen through May of 2011. You can see through August of last year. Another peak up here in May. This would have been the major downtrend for this particular pair. Would have noted it, and you could see how price actually came unstuck 2 days ago at this level here, pushing into it, nudging into it, and then pulling back during the close of the US session. Then yesterday in particular, punching higher above it, and this morning in the Asian session, sheesh, really moving with that momentum. Very little wick as with this European counterpart, which is a good good sentiment that we should be looking for upside for the foreseeable future. And if that's the case, then we should be targeting our price upon resistance level high here at between, if you take the high here at 16,300, if you take the body, then 1625. I would start taking profit at 1625 ish. Primarily because as we go into a major support and resistance level, you can see price tends to slow down quite a bit. So take your profits when they can, and let the market do the rest for you. So as it stands, like CDC on our daily is looking very, very positive, i.e. we have our last candle being blue, arrow being blue, candles being blue, histogram on the other side very much blue, and most importantly our moving averages have all crossed and are below price. Not in order. It's primarily because the move has been so sharp these past couple of days, the past week and a bit, the last 2 weeks in fact, that the moving averages haven't been able to catch up that quickly. But it's all looking good at the moment now and heading higher. So we've had some good news out of, well, the ESM results out of Germany earlier this week being positive, and now the Fed announcement yesterday looking quite cool in terms of purchasing power. So looking good, upside. There seems to be a lot of positive energy out there on the market. Would it remain so? Still, with all the problems that we still face in Europe, it remains to be seen, but everybody's looking for some positiveness in the market, and they are definitely trading it, and hence the reason why we're getting these massive or sharp moves to the upside. They just want to capitalize on any great sentiment out there. A lot of risk-averse trading as well, so be aware of it. And yeah, as long as it's the template selling us, we should be buying, and then you should be nothing more than purchasing. US dollar Swiss franc, here we go, and you can see how the momentum on this one's also dropped quite sharply. This is after we headed into this major support and resistance level here back here in mid-June. This support and resistance here in the shape of the 1000 mark being our weekly, monthly high, and bearish engulfing as we head into it constituted a pullback, and we saw the pullback taking us back towards 9700. Price of one resistance level here, finding a bit of support for a while, and then the bearish engulfing candle here, which really set off price to attempt lower lows at roughly the 945 mark, prior resistance and support through here, really selling into it after a noticeable consolidation for a while. However, these exhaustion candles over here very telling us very much so that the negativity was still in favor, and in doing so forming lower swings, which depicted our intermediate trend being negative. So you can see our intermediate trend very much to the downside, swing low, swing low, swing low, and swinging low, and in doing so breaking through that price support and resistance level 94, but also breaking through, most important, institution moving average, finding resistance at the underside, pulling back, finding resistance, pulling back, finding resistance. This is an exhaustion candle, and this morning on the Asian session really falling to the downside now. So the US dollar taking a bit of a hammering. And if you take your little trend over here, for example, this little intermediate trend now, you can see where price is trading in relation to that. So we should see, or could potentially see, some sort of consolidation at the underside of this. As it stands now, you can see price has got a long way to go through the institution now, so it's trading below all the moving averages. And if anything, if you take the low in August of 2011 to the high that we've seen here at 1000 just recently, and you do a Fib retracement area, you can quite clearly see that the next potential target would be the 23.6 retracement, and you can see where price is trading right now in real time in relation to that area. So you can see that price is heading into this major consolidation area here as we speak, which happen to be a price support and resistance level through most of November, December, January, February, March, April, May of this year. Little consolidation, prior resistance, support, resistance through this area here at the 930. So we have to be vigilant now, because we could see potentially price finding a bit of support through here for the foreseeable future before we see a break of that area. We do need to see 930 being breached to see further sentiment to the downside. Notice the CTC is telling us we should be looking for nothing more than shorting opportunities. You wouldn't be looking for buying, guys. This is very, very negative. And as long as the US dollar is making lower lows, then we should be looking for targets to the downside. So as it stands now, we're going into a potential support and resistance level here in the shape of the 9300 mark. Because of the Fib retracement area, and because we've had a lot of consolidation in the past at the same level. You can quite clearly see here through October a bit of resistance, through November, December, so both resistance and support, through February, March, April, a lot of resistance for this pair. So be aware of it, guys. That's going to be a place where we could see consolidation. Last pair of the day is US dollar Japanese yen. Here you can see price really moving to the downside now after breaking price support and resistance levels. So we had a major high end at 84, we had another major one at 80, and 80 below 80 was a 78, and below the 78 was a 76. Always got to make sure you know where your major support and resistance levels. You can see I know them off by heart because I've been plotting them on the charts every single day for as long as I can remember. So very, very important to see where price is trading in relation to all of these, and then look at your CTC strategy to give you confirmation. You can see the confirmation just recently, June, July, August, September, or the early parts of September, support through the 78 mark, which happened to be price support and resistance in the past, and will do so in the future. So we need to see a break below that, and sure enough we got our bearish engulfing candle 4 days ago, apologies, and very, very negative one indeed. And you can see the CTC on either side very much negative, 1 or 2 areas of blue. However, when price was really moving, there wasn't really an emphasis or sentiment behind that movement, so there was no genuine buying sentiment in the back. So you can see since then price is moving lower, and break of a major support and resistance level, pull back a couple of days ago, pushing to the underside of that 78, failing to actually hold on to it and breaking it, and you can see price actually hugging the low end of the candle. Yesterday's candle moving lower and forming a lower swing now, and you can see on the Asian session this morning price really falling, and momentum now, or sentiment, actually favoring the lower end of the wick, shows telling us that sentiment is still looking negative as we speak going into this Friday. So where to for this pair? Well, breaking a major support and resistance level here at 78 now constitutes that we should see price continuing her fall to the downside, and our long-term target should be the 76 mark for this pair. So as it stands now, we've gone back into this consolidative range that we saw the US dollar Japanese yen trading in for a number of months. 1, 2, 3, 4, 5, 6.5 months. So as long as she's in that, we could see consolidation occurring to the downside, well, consolidation backwards and forwards within this. But US dollar not really looking at the moment now. Are we going to see the Japanese government intervene? Did so last year on a number of occasions, because I think there was once in August, early August, second occasion, the first day, I think it was the first day of November, no, the last October 31st, major interventions on both parts by the Japanese government, which failed to really move price any higher because there was just no genuine sentiment behind it. And so this is the problem now at the moment. Now you can throw money at a problem, but if there's nothing really genuine behind that pair to trade, then price is just going to keep falling, and that's the case here. Nothing's really stacking up. A lot of contraction in the US economy, and it's definitely showing on price action. So as you can see, price really falling to the downside, and as long as we trade below 78, then ultimately our long-term target should be here at 76. That's it, guys. Short and sweet today. End of week. Just make sure there's any analysis or fundamental news out there that's going to really move the market today. We do have some news announcements on the lot for the US market today. So from, what do we have, 1:30 GMT this afternoon onwards, we have core CPI month-on-month figures, retail sales month-on-month figures, which looks slightly lower than the forecast, sorry, the previous figures. And then we have the industrial production month-on-month figures. Yeah, definitely contraction here. Previous figure was 0.06%. They're expecting a forecast of 0.1%, so slight contraction there. Then we have the prelim consumer sentiment figure here, also a contraction. So if it comes out less than the figure, then and there's more of a contraction, you expect the US dollar to fall further against its major pairs. Okay, guys, that's it from me today. Have a fantastic weekend with family and friends, and I'll see you first thing on Monday morning. Until then, trade serenely.